Okay, so you send over this really interesting stack of sources. We've got articles, some research, your notes, all digging into one of the biggest names out there, Binance, and where it's heading.
Yeah, it's such a fast-moving space, isn't it? Always in the headlines.
Absolutely. And figuring out what the biggest player is up to, that feels pretty key to understanding where the whole crypto world might be going.
It really is. It's fascinating how one company's path can sort of light up the way for an entire industry, especially something as core as the exchanges, where people actually, interact with these assets.
Exactly. So that's what this deep dive is all about.
Yeah.
We want to really get a handle on where Binance is today,
Yeah.
understand how it got to this point after some massive shakeups,
Hmm.
and figure out what its story tells us about the future of crypto exchanges generally. Where you might be buying, selling, holding assets down the line.
Right. The mission here is basically to take all this material you mentioned, pull out the essential stuff, the key insights, and try to give you a clear picture of the forces shaping what comes next.
We're looking at the big shifts, aren't we? The pressures, the new directions.
Yeah, where the potential growth might actually lie.
And you can't really talk about where Binance is going without looking back, even briefly. I mean, that launch in 2017, wow.
Explosive is the word.
It really was. They seemed to just appear and boom, instantly became the top platform by trading volume. It totally changed things for millions of people wanting to get into crypto.
It felt a bit like the Wild West back then, didn't it?
Totally. And they were kind of the biggest saloon in town running the show.
That whole period was just about incredibly rapid growth, building out this huge range of products. But as your sources make really clear, that initial era, well, it hit a pretty significant wall, a real turning point.
Okay, and this is where it gets really interesting based on the sources. Late 2023, huge regulatory action.
Yeah.
Binance facing that massive, what was it, $4.3 billion fine from U.S. regulators?
That's the one. Staggering amount.
And then the founder, CZ Changpeng Zhao, he had to step down.
Stepped down and ultimately faced a short prison sentence, too.
So this wasn't just like a slap on the wrist.
No, not at all. The sources really frame this as a pivotal moment, like the end of one chapter for Binance and maybe a huge signal for the whole industry about how regulators were going to approach these big crypto platforms.
It put an end to that earlier, less regulated way of operating.
Pretty definitively, yes.
But here's what's fascinating and a key point in the material. Binance didn't just fold under all that pressure.
Right.
It survived.
So what did happen? What did the sources say shifted internally?
Well, they describe a really significant evolution, a pivot. Richard Teng took over as the new leader.
Okay.
And the focus apparently shifted dramatically. The whole narrative became about transparency, implementing much tighter compliance, KYC, AML.
Know your customer, anti-money laundering.
Yeah.
The standard stuff in finance.
Exactly. And really positioning Binance as a more regulated global entity, trying to play by the rules, essentially. It's almost like watching a company trying to change its whole identity. The sources note that Binance is starting to look, well, a lot more like a traditional financial institution than that super fast, disruptive startup it was in 2017.
And if you connect that specific shift at Binance to the bigger picture in the sources, this isn't just a Binance story. They really emphasize that all the major centralized exchanges are feeling the same kind of intense regulatory heat globally.
So it's not just one company cleaning house. It's more like an industry-wide reckoning.
That seems to be the driver, yeah.
Why now, though? What's fueling this global push for regulation all of a sudden?
Well, sudden might be relative, but the momentum has definitely built. The sources point to governments worldwide getting much more serious about tackling things like money laundering through crypto,
Right.
tax evasion, and also the big one, ensuring platforms trading loads of different tokens aren't acting as unregistered securities exchanges.
So bringing them under the existing financial rulebook.
Fundamentally, yes. Bringing these huge global marketplaces into the existing legal and oversight structures.
And that means specific demands on the exchanges themselves. What are they being forced to do?
Absolutely. The sources detail how they're being pushed or compelled, really, to register with the relevant financial authorities in different countries.
Okay.
They need to provide much more disclosure about how they operate their finances. Basically, play by the rules that traditional finance has had for a long time.
So compliance measures that maybe used to be a bit optional.
Or loosely enforced, yeah.
Yeah.
Those are becoming non-negotiable now. Mandatory.
What are some concrete examples the sources mention? Things that are now standard.
KYC, know your customer, is probably the biggest one. Verifying user identities properly. That's baseline now. You can't really operate a major exchange without it anymore.
No more anonymous trading at scale.
Pretty much. And the sources also highlight transparency tools like proof of reserves.
Yeah, showing you actually have the customer assets you claim to hold.
Exactly. That's moving from being like a marketing thing you do when the market's shaky to becoming a standard expectation. Real proof, not just promises.
Okay, so one powerful force is this push towards centralization, regulation, transparency for the big players like Binance. Got it. But you said the sources also highlight a counter trend, something pushing the other way.
Yes, and it's a really important dynamic. While the big centralized guys are getting regulated, you've got the rise of decentralization gaining ground at the same time.
Decentralized exchanges, DXs.
Exactly. These alternatives are getting a lot more popular.
What's the appeal there? Why are users drawn to DXs, especially now?
A lot of it goes back to that original crypto idea of, self-custody. Not your keys, not your coins.
Right, control your own funds.
On DXs, users typically keep direct control of their private keys and their crypto. They don't have to trust a central company to hold it for them, which is appealing after seeing some exchanges collapse.
Makes sense. And privacy, too.
That's another big draw. DXs often don't require the same level of personal data, the KYC stuff, that centralized exchanges now absolutely demand. So for some users, that privacy aspect is key.
So knowing this decentralization trend is happening, are the sources saying Binance is just like ignoring it and betting everything on the regulated centralized model?
No, actually, that's another really interesting point they raise. Binance seems to be actively acknowledging this DX trend, maybe even trying to embrace it in certain ways.
Oh, so?
Well, they've continued to invest in and support their own blockchain, the BNB Chain,
Yeah.
and they support various DeFi protocols and decentralized finance apps that run on it.
So it sounds like they might be trying to have their cake and eat it too, play both sides.
That's pretty much the question the sources ask. Is Binance hedging its bets here?
Interesting.
Yeah, it suggests that maybe the future vision for Binance isn't just being a regulated, centralized exchange. It could evolve into something more hybrid.
A hybrid platform.
Yeah.
Like connecting the two worlds.
Potentially, yeah. Acting as a sort of bridge between the regulated, compliant financial system and the more permissionless, decentralized crypto space. That's one possibility the sources explore.
Okay, let's switch gears a bit. Where do the sources see the next really big wave of growth coming from?
Yeah.
Beyond just trading Bitcoin, Ether, and other cryptos.
Right. This is where things get really forward-looking, though the sources are careful to note this is heavily dependent on regulators figuring things out.
Always the caveat.
Always. But the big potential area everyone's talking about is tokenizing real-world assets. RWA tokenization.
Tokenizing real-world assets. Okay, break that down. What does that actually mean?
It basically means taking traditional assets, think stocks, bonds, real estate, maybe even things like fine art or collectibles, and representing ownership of them as digital tokens on a blockchain.
So you could own like a fraction of an office building represented by a token.
Exactly, or a piece of a company's stock, or a government bond. The idea is that putting these on a blockchain could make them much easier to trade, maybe 2 under 47 globally, and easier to divide into smaller pieces.
And the crypto exchanges, Binance included, are looking at getting into this, facilitating this kind of trading.
Absolutely. The sources indicate this is a major area of strategic interest for them. It's seen as a huge potential growth market.
So the speculation is, if or when the regulators get comfortable and set the rules.
Then these exchanges could potentially transform. They wouldn't just be places to trade crypto. They could become platforms where basically anything of value is tokenized and traded.
Wow. Instantly, globally.
200 for 7. That's the vision.
So the way you might buy a share of Apple, or maybe even a tiny piece of a famous painting someday, it could happen on an exchange platform that looks kind of like what we use for crypto today.
That's the potential scenario outlined in the sources, yeah. It would massively expand what's available on these platforms.
Okay, and who do the sources see using these evolved platforms? Is it still mostly us, the individual retail investors?
Well, retail is still crucial, absolutely. The sources make that clear, but they highlight a really significant and pretty rapid shift happening in the user base. The entry of institutions. Big money.
Like hedge funds and investment banks.
Exactly. Hedge funds, family offices, asset managers. The sources even mention central banks exploring use cases. These players bring huge amounts of capital.
Right.
And they have very different needs compared to the average retail trader. More sophisticated requirements.
So how are exchanges like Binance adapting to attract and serve this institutional money flowing in.
They're building out specific services and even whole divisions, things like institutional-grade custody solutions.
Secure storage for huge amounts of crypto.
Right, often using third-party specialists. They're also setting up OTC desks, over-the-counter trading.
For big private trades that don't hit the public market screens.
Precisely. And developing much more robust APIs, application programming interfaces, so big trading firms can plug their own complex systems directly into the exchange's infrastructure.
So the sources are kind of suggesting that the future, in terms of how these places operate and who uses them, might start to look a bit more like Wall Street.
That's the comparison that comes up, maybe moving away from some of the wild days feel of early crypto.
Though the sources also acknowledge that maybe some of that wilder stuff won't completely disappear.
Right. They temper it a bit. It's unlikely to become exactly like Wall Street overnight, or maybe ever. But the influence and the demands of these big institutional players are definitely pushing the infrastructure and the services in that more traditional finance direction.
Okay, so if we're talking about tokenizing everything and bringing in massive institutional funds, security has to be like priority number 1 times a million.
Oh, absolutely critical.
Especially given the history of hacks in this space.
Security is presented in the sources as just the non-negotiable foundation.
Yeah.
If this industry wants to mature, gain widespread trust, especially from institutions and regulators.
You can't have these massive breaches anymore.
Exactly. The high-profile hacks we've seen in the past just cannot happen at the scale they're envisioning for the future.
Binance has that CFU fund, right? Their insurance thing.
Yes, and the sources acknowledge steps like that, beefing up their secure asset fund for users, the SAFU fund, which uses a cut of trading fees for insurance, and improving internal security systems.
But the sources suggest that's not enough.
Basically, yeah. What's good enough today probably won't cut it for a future handling trillions in tokenized assets and institutional money.
So what kind of advanced security are we talking about? What do the sources say is needed?
They point towards things like continuous, real-time audits of reserves and system security, not just periodic checks.
Okay.
Massively expanded bug bounty programs, paying ethical hackers to find flaws before the bad guys do.
Makes sense.
And really sophisticated AI-powered threat detection systems, constantly scanning for anomalies and potential attacks in real time.
Because the stakes are just so high.
Immense.
Yeah.
The sources basically say, in an era where you might have billions, maybe trillions, locked in these protocols and platforms, a single major security failure could be fatal. It could literally destroy an exchange.
Okay, so after going through all the regulatory drama, the fines, the leadership change, and looking at how the whole landscape is shifting, where do your sources say Binance actually stands right now, today?
They conclude that Binance still has some pretty significant inherent strengths.
Like what?
Its massive existing user base around the world that's hard to replicate, the deep liquidity it offers across so many different crypto assets.
Meaning it's easy to buy and sell without moving the price too much.
Exactly. And its whole established ecosystem of products, from the exchange itself to the BNB Chain, Launchpad, etc., all that gives it a huge competitive edge, makes it really difficult for rivals to just swoop in and take over quickly.
But that past dominance, that size, it's not a free pass for the future.
Definitely not. The core challenge highlighted again and again in the sources is trust.
Trust.
Actively earning back and maintaining trust. Trust from users, sure, but maybe even more importantly now, trust from regulators globally.
And that trust isn't just assumed because they're big.
No, it has to be earned continuously. Through transparent operations, full compliance, proving they're playing by the new rules. It can't be based on past glory.
So what's the sort of final word from the sources on Binance's prospects? Can they survive this? Can they thrive in this new world?
The consensus seems to be that their continued survival, and whether they can maintain a leading position, really hinges on their ability to do several things at once.
Which are?
Adapt quickly to all the regulatory changes, comply fully everywhere they operate, and somehow simultaneously keep innovating in areas like maybe those hybrid models we talked about or new asset classes like RWA.
It sounds like walking a very complex tightrope.
That's a good way to put it. A very complex, high-stakes tightrope walk.
Okay, so pulling all these threads together then. The picture the source material paints of the future of crypto exchanges. It's not simple. It's not just one thing or the other.
That's right. The conclusion isn't that the future is purely decentralized. Everyone abandons centralized exchanges for DXs.
Right.
And it's also not that it just becomes a complete clone of traditional finance, totally institutionalized.
So it's going to be Messy.
Messy is a good word. The sources describe it as likely being a messy, powerful mix.
A mix of what?
A mix where both forces are strong. You'll have these centralized, increasingly regulated players like Binance operating alongside and interacting with a vibrant decentralized ecosystem. Platforms trying to bridge those two worlds will likely be key.
And despite everything, the history, the stumbles, the fines, the comeback attempts, the sources still seem to position Binance as pretty central to how this all plays out.
Yeah, the perspective offered is that Binance, with all its transformations and challenges, is still kind of leading the dance in figuring out what this new global exchange landscape actually looks like.
Wow, okay. That is definitely a lot to think about. We've covered quite a journey here. Binance navigating those huge regulatory hurdles, the whole industry getting pushed towards compliance.
That global pressure.
The really fascinating tension between the centralized, regulated world and the rise of decentralization.
DDXs, yeah.
Then looking ahead at the massive potential of tokenizing basically everything.
Stocks, bonds, real estate, maybe art.
And seeing how the big financial institutions coming in are fundamentally changing who uses these platforms and what they demand.
And understanding these shifts, it really is crucial for you, the listener, because this stuff directly impacts how you'll interact with digital assets in the future.
Right. What you can trade, where you trade it, and how much you can trust the platforms you're using.
Exactly. The rules of the game are changing.
It really does leave you with a big question to chew on, doesn't it? Thinking about everything we've discussed from the sources, this clear move towards regulation, towards bringing in traditional institutions, towards these potentially hybrid models. What does all that mean for the original spirit, the original ethos of crypto?
Yeah, that's the core tension, isn't it?
Does this evolution make the whole space more accessible, safer, maybe more legitimate for everyone?
Yeah.
Or does it fundamentally change what crypto was supposed to be about in the first place? That's something worth mulling over as all this continues to unfold.